Good morning, master traders and money magnets. This is the SPY that you guys are looking at here. Naked chart of the SPY. It's zoomed out a bit. Uncle is going to show you guys how he gets his fib levels and support and resistant levels real quick. I'm going to do it fast or, efficiently, not too in depth. But here's the first set of fib levels that I have here. I started off from all-time highs. That's February 19th high at 613.23. So we want to make sure we get the coordinates right, and we brought it down to the low of April 7th, and the low of that day was 481.80. So we want to make sure that's correct. Boom. Now we got a more macro level fib level based on the downtrend that we had from all-time highs down to April 7th low, which is when we started reversing back into an uptrend. The last few months we've been in an uptrend. So now we want some more micro level fib levels. So this is when we zoom in and you guys can see that we had this previous pivot high from May 19th, and now we have this higher pivot low for May 23. So we want to start from that high and bring it down to that low. We'll change the color so we can know the difference. We'll turn it into blue. So the pivot high for May 19th was at 595.54. So we'll get it down to 54. And then the pivot low for May 23 was 575.60. Now the coordinates are correct and we have our micro level fib levels. We also had a trend line that I was watching. We started from May 23rd low and we connected to May 30th and June 2nd low. So we have 3 touches there, and we'll change the color of that trend line to yellow. And then let me bring up my 5 daily moving average. I want to change the color of that moving average to green. So we're looking at this chart, and you might ask me, I don't know if you guys want to know, but you might be wondering, is Uncle bullish or bearish? I tell you, in my last video, I said it was looking bullish because we was bouncing off that multi-week trend line, multi-test of that multi-week trend line. Last Thursday was still giving us buying pressure around that area. But what happened the next day? Well, we had some conflict in Iran with, all parties involved, the other country, Israel. And, well, it caused a gap down. But I'm, like I said, guys, I'm not with the drama. It's very sad what's happening, but remember, Uncle's just a chart guy, so I'm just gonna focus on my job. It's sad what's happening, what I'm hearing and stuff, but remember, I'm just here to do my job, and my job is with the chart. And if you're wondering if we bullish or bearish, well, it was looking bullish last week. It's kind of looking bearish right now. As a matter of fact, as I wrote in the thumbnail, it's looking a bit toppy. So I'm gonna talk about, if I'm right, what can happen and what levels need to break down, and if I'm wrong, what can happen and what levels need to recapture. So to me, this is looking toppy because, well, we started off with a gap down, and this obviously, in hindsight, we can see that there was continuation. Rejected from the 5 daily moving average, which I've said many times for many years, rejecting from the 5 daily moving average is bearish price action, and we got very close to retesting that multi-week trend line, which we had selling pressure. So if I'm correct, and this is a top, I'm not calling a top, but it's looking toppy, okay? I'm just saying it's looking toppy. I'm not calling a top, but if this is a top, you guys can see the buying pressure around the 595.5-ish level. That's the next level that must break down. That is the next level that must break down, because while I'm seeing bearish price action behavior, there's still a bit of a hint of bullish price action behavior as well. Here's why. Let me get my arrows for this one. So you guys see this pivot high for May 19th. Look at how we back tested that pivot high last Friday. That's what you call a back test of a previous breakout level. You guys understand? Looking at this chart, can you guys understand why I'm saying there's still a hint of bullishness? Because this previous pivot high that served as a sell zone has turned into a buy zone, which is still bullish, overall bullish price action behavior. So we're seeing signs of bearishness, which is why I'm saying it's looking toppy, but we're still seeing a hint of bullishness, which is why I'm not fully committed to calling this a top just yet. But like I said, if we break down 595.5, that would be a false breakout setup based on this pivot high right here. This false breakout setup, this breakdown of 595.5, potential breakdown, would tell me, I would interpret it as the price action telling Uncle Charters, yo, Uncle, the top's in and we're heading down lower, because on the structure of an uptrend, the previous pivot high should become the new sell zone. It shows that the market makers accept it. They accept it as the new buy zone. That's why that 595.5 level is so important, because it tells me or not if the market makers, those manipulative market makers who moves this market, it tells me if they accept this level as a buy zone or not. Because if the answer is yes, which we're going to find out in the next 2 days, if the answer is yes, that means the bulls have a shot at more upside. But if the answer is no, and we break down 595.5, the price action is clearly telling us, keep it simple guys, it's clearly telling us this bullish structure is being invaded. It's being invalidated, because the previous pivot high on the stairway up in the bull trend should be the new pivot low. That's the idea. So when it fails to be accepted as a new buy zone, that's going to tell me, hey, that breakdown of that multi-week trend line, that rejection from the 5 daily moving average, yeah, this bearish follow through. Does this make sense, guys? So 595.5 is important. If it breaks down, that's what I recommend looking to short. That's bearish continuation, and no, the RSI is not in oversold territory, which means there's still strength left to the downside. The odds, at least. I use the RSI to help measure the odds, not for buy or sell signals. It helps me measure the odds. It helps me measure the strength and momentum. 595.5 fails, look to short with 592.5, 591, 589 or lower in play. Now, if we are to trust this bounce, if the previous pivot high is truly the new pivot low, we trust the bounce when the bounce is strong enough to clear resistant levels. I have 597, which is around where we closed. 599, which is the previous buy zone all last week, multiple times. And of course, the fib level at 600.4. If those levels can recapture, 601.7, 603, and 605 plus would be all back in play. That's how we trust the bounce from a critical support level. When it's strong enough to clear resistance, when it's strong enough to recapture a lost level. So while it's still looking toppy, the bulls are still technically alive. But I've given you the pivot level, the important pivot level to watch in the next 2 days. And then you will get your answer if this is truly a top. 595.5. Below it, bearish. Above it, bulls still have a shot at a bounce, but they'll need to recapture some lost level. Triple Q, similar situation to the SPY, gap down, rejected from the 5 daily moving average. That is bearish price action behavior. However, we back tested my 1.236 fib level at 527. We closed just 4 cents below it. So it's technically a breakdown. Technically that is a breakdown, but that is a weak breakdown. But I'll consider it a breakdown. Right now we're below 527. We closed below it. If Triple Q can stay below it, there's definitely a chance for more downside and losing 523, because here's 523. If you remember from mid-May, that 523 level served around here as a strong sell zone. It also served as a buy zone in early June. So we'll see what happens if it get tested again. Below 527, 523 is possible to be tested. And of course, if that level fails, I would be very, very bearish on Triple Q and favor the gap down, the gap fill, and the gap fills around 509. But if we are to bounce, we must stay above 527 and clear 530 and clear 531.7. That's a sell zone as of right now. We rejected pretty hard from that fib level, 531.7 last Friday. So recapturing that level would definitely be bullish to me, but bulls will need to stay above 527 and clear 530, because if we stay below 527, 523 is in play, and below 523, bears are in control of momentum. Here is Tesla. Tesla not once on Thursday, but twice, counting Friday. We rejected from the 61.8 fib level, which is around 331.6-ish. And I had a resistant level at 333 as well. Rejected twice from that area. 331.6 to the 333 area. That's the sell zone. That's the zone that bulls must clear this coming week. Because if they do, they can put in a pivot low, a higher low, and push Tesla higher. This pivot low from June 5th would be a higher low that can push Tesla higher if we zoom out and look at this little uptrend we've had since April. But if the rejection that we got from the 331.6 to the 333 area, we got it twice. We had it twice. The rejection we got from there, for me to take it more serious, more support levels must fail. As usual, 324, 322 in the critical fib level at 320.5 must fail. We tried to break it down on Thursday, which technically Tesla did, but it was recaptured for a false breakdown setup. That's why if 331.6 and 333 clears, I would be very bullish. But if 320.5 fails again, dead cat bounce. And I would feel a lot more confident in being bearish with the gap fill around 309-ish to be filled and possibly drop even lower. Here is NVDA. Nice pullback, but not quite bearish just yet. If 141.5 and 140 is lost in the next 2 days, that would be very bearish. We break down this trend line that I have here, starting from May 23rd low, May 30th low, and of course Friday for the third touch. We break down those support levels, we have ourselves a breakdown. But if we clear 142.5 and we clear 144 again, now that we had the third touch, now that we have the third touch of this trend line and we clearing those levels based on that context, because context matters, I would feel more confident that we go reach a higher pivot high. 147, 150 would definitely be my target. Here is coin. Did not quite break down the descending triangle pattern. Did not break it down just yet. We did attack liquidity a bit. So based on this context and the way it's looking, liquidity was attacked. Anyone who had stop losses below that 239 level, they may have been hunted and caught, but technically not a breakdown just yet. But if liquidity has been hit, there's one of two things that can possibly happen. Well, one of three things. One thing the market makers might be thinking to do is attacking the liquidity they built at the top of the triangle, which is above 258. They could be going to attack that liquidity and then maybe do a false breakout, or they could give us a legit breakout. Now that they faked out the bears, they could give us a legit breakout. That's one of two. The third one is we get a dead cat bounce. Now that all the stop loss hunting has been done, possibly been done, they could really push it down lower now. Faking people out, getting people to be bullish, and then they'll push it downwards. And the people who got stop loss hunted, they're not going to be happy because it's dropping, and the people who were tricked into being bullish, well, they got tricked. It's trapped. So either way, below 239, that's when you want to get bearish again, because technically we didn't get a breakdown, but if it breaks down based on this context, I'd feel a little more confident in being bearish. But if we are to head back to the top, 241 must clear. Well, it's above 241. So next resistance I have is at 243, 245, and 246.7. Those levels clear, we can head back to the top of the triangle pattern. 258 is that target, and above 258 would be breakout mode. So I would play it level to level and leave runners, because getting back to the top would probably be tricky. What they're going to do next, they could get a false breakout, attack the stop loss, push it back down, or give us a legit breakout. Either way, I would play the long game if we clear 243, 245, and 246.7 and play it level to level up to 250 and 258 zone, and then leave my runners to see what will happen. But that's the plan. Okay, I said a mouthful, but I hope you guys get it. Thank you. Here is the VIX. That looks bullish to me. It gapped up, it pushed down intraday, but it was definitely buying pressure, closing much higher. And guess what? It cleared my 19 level and it cleared my 20.4 level. All breaking out, turned that area into a buy zone. So if there is bullish follow through, 21.3 is the next level to clear. I have resistance level at 22.4 as well, and then 23.6. Those level cleared, guys. We can head up to 25.5 or higher. If it's pullback time for the VIX, 20.4 and 19 both must fail, and that's when I would get bearish again on the VIX. Now, one last thing I want to cover. This was requested by a Discord member. Here is crude oil's future. I have a fib level from January 15th, and I brought it down to April 9th low, and I had these fib levels right here that you guys see. And the first fib level I have is at 71. So, and we cleared that level last Friday. So it's my equilibrium level for the next couple of days. If it's pullback time, 71 must fail. That would put 69.5 and 68 in play. Below 68, I would favor a deeper pullback. We're breaking down multiple fib levels at that point, and we should head down to 65, 61 or lower. But it would start with breaking down 71, 69.5 and 68. Now, if more upside is the plan, staying above 71 is a must to keep the breakout intact, with next resistance at 73 and 75. If we can clear those levels, I would favor 79, 80.7 or higher to be targets and in play. Okay, guys, thank you so much for watching. I hope you guys have a great rest of your weekend. See y'all tomorrow. Peace. Peace.